Hi everyone, Hugh here from Centaur Financial Services. Of late there's been a lot of current market volatility, so I just want to provide some context as to what we've been talking with our clients about, which will hopefully give you some peace of mind during this troubling time. Obviously we started the year worried about the rising interest rates and what was going to be the impact of inflation as a consequence of the last few years. And then on top of that, to add to the drama, we had the Russia and Ukraine conflict. Obviously, from a humanity point of view, this is quite tragic, but that doesn't mean that it's necessarily tragic for our portfolios or our investments. So I just want to provide a little bit of context that we've provided to our clients that hopefully will give you some peace of mind and really help you from not panicking and doing something adverse like selling down a portfolio which when it's not a good time to do or it's not for the right fundamental reasons. So if we go through some history, since Pearl Harbor there's been 21 what we would call market shocks, including these global conflicts, as you'll be able to see in the chart. What we know from there is it's taken 22 days from the market to bottom and then 47 days from the market to recover. So we know that based on what we've seen historically, while it's not very it's terrible for humanity, the financial situation isn't that bad. If we then go and look at the next slide that we can see from 1926 to 2013, including all that time, the average large cap share market US return was 10%, and for the small caps it was 11.6%. Really good returns in their own right, and that includes the wars, that includes recessions, so good outcome. Really interesting fact that if you actually go and look at just the investment returns during when the wars were on, the return actually bumps up to 11.4% for your large caps and 13.8% for your small caps. So you can actually see that you've done better during those periods of war than you have during ordinary non-war times. So it's really good food for thought, and it really leads to the idea that it's not the time to panic right now. We know that the time to recover shouldn't be too long on a historical perspective, and if we can stick to our long-term plan, you're going to do okay. The challenge for us is always make sure we're not speculative and make sure we're not taking too much risk. Everything that we do has got to pass the sleep at night test, and certainly that's something when we're talking to our clients about, that's one of our big goals for them, is that they have a strategy in place that's working towards the plan that's going to achieve their goals so they can live the life that they want. Hopefully this has helped you, and we've also put in just at the end here an investment chart of long-term returns. So what you can see on this is that it starts in a bottom corner, ends in a top corner. There is a lot of volatility in investing. No one's going to say there's not, but if we can hold it out for the long term, we're going to be okay. So I hope that helps, and good luck. Thank you. Bye.